Reporting season has been a mixed bag so far. On the positive side, we've seen more than 50% of companies beating expectations. And we've actually seen around about 70% of companies increasing profits and around about 60% of companies increasing dividends. The bad news is that while 10% of companies have upgraded their outlook, we've seen 20% of companies actually downgrading the outlook. We have also seen some key themes emerging throughout earnings season that investors do need to be aware of. On the plus side, companies which have exposure to the residential housing market here in Australia have done extremely well. These are companies like AVJennings, Nick Scali, Lendlease, as well as Mirvac. Also, companies involved in wealth management, it's a massive market in Australia, have continued to do well. Some standouts have been AMP, and there's been a key dividend focus, especially in the mining space, where we have seen Rio Tinto as well as Caltex coming out with some impressive results. Outside of the mining space, there has been a clear emphasis on returning some of the franking credits or excess franking credits back to shareholders. And the two companies that come to mind here are Tabcorp as well as Harvey Norman, which have actually done capital raisings to shore up their balance sheets after giving out excess franking credits and dividends. On the negative side, we've also seen some negative themes emerging. Mining services is in a clear downtrend. Even some of the stellar stocks like Monadelphous have seen their business coming under pressure. We've also seen UGL, Macmahon also coming under pressure. And we've seen some retail weakness as well. We've seen Noni B coming out with some negative earnings, as well as Kathmandu out with some negative earnings as well. Looking forward and at the investing environment, I guess some of the areas which have been contracting are clearly mining services, as well as manufacturing. On the plus side, the areas that are expanding are housing, technology, as well as the healthcare space. But with negative interest rates in parts of the world like Japan, like Sweden, Denmark, Switzerland, negative deposit rates in the European Central Bank, and falling interest rates in much of the world, we're going to see clear support continue for those high yielding dividend type stocks towards the end of the year. So looking at earnings season, it has been a bit of a mixed bag, but what has been clear is that certain themes have been emerging and certain companies have been outperforming.